Steve, I want to give you some major love later in the hour about your outlier call, which is earnings really look they look a little struggling here, don't they?
They are a little struggling. And when you look at what's happening in terms of the economy, you look at the productivity deterioration, you look at the pricing power problems that companies have, the net is margins have been squeezed. They've increased employment a little bit too aggressively. They got suckered into believing the second and third quarter of last year with the reality when we got an economy that's really running at about 2.25%. And therefore, they're now seeing margins squeezed, and that's one of the problems. Okay. Going forward.
We're going to get to that. That's important. Tony, you are front and center this morning. I think every news outlet looking at Greece and this idea of ring fencing it. In the short-term paper market, in the liquidity market, how does that respond to what may transpire Saturday and into Monday? If we get capital controls, how does your world react?
Whenever investors are nervous, they go to globally, they go to the Treasury market, and if they want to park money for the short term, they go to short-term instruments. And so this means that the scarcity of T-bills and other short-term instruments only worsens, and that's
okay. I got to make
very
some
low
notes here.
interest
The
rates.
U.S. 2 years 0.69%.
Well, those
Where's
are
that going to go?
Longer. So if you wanted to park money without worrying about price fluctuation, one would go even shorter. So the very, very short T-bills, looking at a month, 2 months, 3 months,
they go negative yield.
Negative or zero, and so that reflects this.
Do you anticipate this on this Friday, right now, on your Pimco desk, when you talk to your professionals, are we going to see that emotion this Friday?
Well, we continue to expect a last second agreement. Some could say last day, last hour, but it looks like it's going to go to last second the way this is going. But in the end, we're very optimistic about Europe in the medium term, long term, about how it will progress. And so we're long Spain and Italy bonds there. We expect the ECB's purchases to continue to compress yield spreads in those nations in the periphery relative to German bunds. There's a wide yield spread.
Could Brendan jump in over time? Right,
well, we've been talking about the short term, the bills. Run that out to the 10-year note. What's your inflation expectation out at that timeline?
Well, the yield range had been for much of the year 1 3/4, 2 1/4 for the U.S. 10-year. It looks like it's shifted now to 2, 2.5, partly because the markets are starting to see the whites of the Fed's rate hikes eyes becoming more confident. So we expect a little bit of an increase in yield this year. Inflation picking up 0.3 of a point the rest of the year at the core level, according to our models.
And of course, underneath is this fear of liquidity.